everybody. We are live. Welcome to our Wednesday webinar. We're here to talk about the Lex Lock today. I know that we have 0 people on right now because we just got on. So we're going to wait for some people to come on in and start joining us. I am going to pull up the Instagram webinar, the Instagram live over here on my phone so I can see all the comments coming in. We have the camera over here for Instagram, Facebook, LinkedIn. What else? Everything else right here. All right. And we are live. Thank you, everybody, for joining us today. Again, I like to wait for a couple of people to join into the webinar before we really get into the nitty-gritty. But for the sake of the posts being made afterwards that everybody can view, my name is Appio Fragoletti, Director of Banking Relations here in Lexington. To my right, I have Chris Colucci. Go ahead and give a little insight about yourself, Chris.
Yeah, thanks for having me. I'm the team lead here at Lexington Capital. Today we're going to be talking about the LexLock program that we have going on.
Yeah.
I'm excited to dive into it.
Yeah, Chris here, extremely knowledgeable guy in the space. He's a veteran in the space to say the least. He's been here, I don't know, pretty much the longest out of everybody here. Great asset to the company, to say the very least. But yeah, all right, so we have a couple of viewers coming on. Thank you, everybody on Instagram. Thank you, everybody everywhere else. So to break into the LexLock, the Lexington line of credit, I like to say that it's our most sought-after program here. Maybe that's because I run the program, I'm a little bit biased towards it. But essentially, it's the line of credit that everybody wants, right? Everybody that has a business, anybody who's looking for financing, you want a line of credit, always. Can't hear you well, one of our comments. I'll speak up here a little bit more, I guess, in the meantime, and hopefully you can hear me a little bit better, L'Oreale. I hope so. Let me know as well. I appreciate you commenting that. Now, that should help out. All right, back to it. So yes, the Lexington line of credit. There's really 2 sides to the Lexington line of credit when you really break it down. Both sides are facilitated through traditional banks, tier 1 banks around the country. Chase Banks, Bank of America's, Wells Fargo's, just to rattle off a few. Now, the volume is very, very low. We'll work on fixing this issue. Let me know if this helps at all, folks. Thank you, Alfred, as well. But let me know if this helps at getting it closer. I brought our microphone a little bit closer here. Now, back to where we were. So the Lexington lines of credit, they're facilitated through traditional banks, right? So your Wells Fargo's, Chase's, Bank of America's. Now, these are tier 1 banks around the country. These are where you really want to be getting in with, all right? And Lorelli, we are working on the issue. If the volume comes back up for you, if you could let me know. Oh yeah, Alfred, yeah, lots better. Amazing.
Perfect.
Lorelli, let me know if it's better for you as well, so I know that we're in good shape here. Thank you guys for being active. I'm on my phone. I can hear you really good. Broker Rick, thank you very much for letting me know, Broker Rick. You're the man.
What's up, Broker Rick?
All right. So yeah, tier 1 banks. I mean, that's where you want to be. Of course, there's a butt for every seat. We'll keep it friendly here for the webinar. There's a butt for every seat when it comes to financing or any realms of life, right? And so you have your alternative, and then you have your traditional. LexLock is traditional. So we're not seeing daily payments. We're not seeing weekly payments. We're seeing nothing but monthly payments. Lower interest rates, typically based off of the prime rate. Everything starts off at the base of that prime rate there. Now, both sides of our program, we have one side of our program that offers 0% interest for an introductory period, right? That's 0% interest, technically between 6 to 24 months. We have the option of doing things on the personal side as well. For some reason, it's still not good for L'Oreale. We have ways to do it on the personal side as well as the business side. Now, obviously, most of our clients are coming to us for the business side of things because that's what we do here. We specialize in business financing and specifically specialize in lines of credit. But for anybody out there that needs something on the personal side, you maybe don't have a business, we actually have clients who come to us for their wedding financing, which is very
Yeah.
interesting to say the least there.
Anything.
Anything at all. A lot of people out there, you're just getting your businesses started, and maybe you don't haven't gotten your EIN yet. I'm a big fan of, if you're going to jump into something, if you're going to start a business, well, get as far as you can without it first, because you honestly usually you can get by with a lot. So if your clients needed something on the personal side, it's not an issue. We can still run our 0% interest line of credit program. Now it's a very interesting, because it does come, the 0% does come in the form of credit cards, but we give them line of credit capability, right? So you can do anything that a line of credit does and still keep it at 0% interest. It's a phenomenal piece of financing. Now on the business side, if you want to strictly keep it on the business side, I like to say that you get that 0% up to a year and a half. Um, and then flip-flopping over to our traditional bank line of credit. Both are traditional financing, but I like to call this, your BLOC, as most people might recognize it in the space. It's a forever revolving line of credit, right? It's on a renewal basis. You just have to renew it every 5 years, as long as you keep it in good standing. You make your interest-only payment, which is all that's required. You're golden, ready to keep on going. You can have this in place for 5, 10, 15, 20, 25, 30, 35, 40 years. Forever. As long as you and your business are still around, you have this line of credit in your back pocket to utilize. And like I mentioned before, you are only required to make interest-only payments. So that's your lowest monthly payment that you could possibly have for any piece of financing. All right. So if that doesn't tickle your fancy, maybe these next bits will. We have no time and business requirements whatsoever. We've had our clients, we've helped them open up their LLC or corporation the day prior and gotten working the very next day, and gotten amazing results as well. There's no time and business requirement. There is no revenue requirement. You can be doing $0. You could take $100,000 loss on your taxes, whatever it is. No revenue requirement. We can still move forward. On top of that, if your credit isn't good enough to really get a solid approval here, we also accept cosigners. This is cosigner funding friendly, right? So if you have anybody in your life, a loved one, family, friend, if you wanted to pay somebody at the bar, really don't care, we do accept cosigner funding, right? So that you have the trifecta there, as far as what you need to be qualified, which is just good credit, or somebody who has good credit. And this is still some of the best financing that I'm sure most of you have really ever seen, to be honest. So obviously, you could see why this is some of our most sought after financing within the company. It really speaks for itself. Now, this program alone has helped us onboard probably hundreds of referral partners, right? So this is great for anybody who's here who is a prospecting client of ours, absolutely. But as well, we like to run these webinars because we want to get the word out there to the other brokers of the world, to the other people that are in the space or have or deal with a lot of business owners on a day-to-day basis. Because we have a wonderful referral program here, a wonderful commission structure for our referral partners to get paid out on their clients' deals, right? With no extra cost to the client whatsoever. And you're giving your clients the best financing possible. So who are they coming back to when you're all said and done, right? They're coming back to you. Coming back to you so you can keep that good relationship. You can bring your family, you can bring your friends, your true friends into this without having to worry about them being being sold something that's 30, 40, 50% on a daily payment, right?
It's great value.
Great value.
Provides a lot of flexibility. So just in regards to both the partners and the business owners themselves, it's just great value all around.
Mm-hmm. Now, again, there's a position for every seat. So I like to say that this specific piece of financing, you're not getting this turned around in 24 hours, right? That's the caveat there, I guess you could say. You know how the saying goes: fast money isn't cheap, cheap money isn't fast, right? And this is cheap money. Typically, we're taking 2, maybe 3 weeks to really get this all set up in your hands, ready to go. Obviously, nothing here reports to your personal credit. Everything's on your business credit. And while we're on that topic of personal and business credit, we do everything in our power to protect your personal credit, right? We don't want anything showing on there. But on your business credit, this is actually one of the fastest business credit building programs there is. And that's because we typically go to a couple of different banks, two, three, four, maybe five banks. And how is business credit established? Pay history. So now you have pay history with multiple banks at the same time building your business credit. So we let you genuinely build your business credit 3 to 5 times faster than any other program out there while getting your cheapest financing, your best terms, your best rates, almost no qualifications needed besides good credit or somebody who has. This has really changed the lives of many people. We work with tons of people in the real estate space, investors, developers, brokerages, real estate brokerages, all the time. Tons of tradesmen, lots of construction guys, electricians, plumbers, whatever types of tradesmen out there. You get paid on well, you get paid in interims, in periods. Maybe every three
Right.
months, 2, 3, 4 months, you're getting paid. So you have to float your payroll. You might have to front your material costs, and what you don't want to take out a term loan for something like this because well you might buy a pallet of 2x4s today and a pallet of pavers in next month and so on and so forth. Where if you take out a term loan, you're instantly paying back on that full amount. If you get a term loan for 50,000, you only spend 20,000. Well, it doesn't matter. You're paying back on that 50,000. You're paying interest on that
No matter
50,000,
what.
no matter
Yeah.
what.
The flexibility that it provides is just not comparable, especially in a situation like that. But going off of what you said too, right? The fact that it can really work with any industry, right? It just requires credit. I do see we have a question regarding what is the credit score medium? I'll let you.
We like to see about a 680 at least, preferably 700. Now, that's not set in stone. We have clients that come to us with a 650, but they have some higher credit card debt. So we coach them and work with them on how we can get that credit card debt down, which in return brings our credit score up to that threshold that we need, that 680, 700. Obviously, the higher the better. Um, but we do work with your clients in helping. We have multiple avenues in which if you can't get your credit card debt paid down, we can assist you in a couple of different avenues. We'll game plan with you, we'll coach you, we'll advise you, everything of the sort. But great question, thank you for asking. Where were you? You were somewhere in there.
Just the flexibility of the
Flexibility.
product, yeah, and the fact that any industry really just requires credit, and the fact that it offers a cosigner, really opens up the door for a lot of opportunities, a lot of individuals. Where again, like you're saying, right, if they're just getting started, want to get some business credit established, this is just a fantastic way to do it and open up the door for a lot of additional avenues in the future, right? Those more traditional options a lot of times are going to need you to or want to see that you have business credit established and that you've had prior experience, with financing, paying it back on time. So this again just is a great stepping stone in the right direction for any business owner.
Yeah, yeah, it really, really is. Alfred, if you would like to inquire, definitely reach out to our my main colleague here, Tom. He's the head of partner relations. He'll definitely go over all of those specific details with you. Absolutely. All right. That should be Tom at LexingtonCapitalHoldings.com.
Yep.
Pretty sure he commented somewhere in there. You can find them on all the social medias as well. But yes, definitely great for everything that he just mentioned as well, and especially for our startup business owners, right? You don't want to over leverage your personal finances, your personal credit to start your business, right? You really want to separate the two as much as possible. So I recommend that you spend the $500, open up your EIN, and then come to us. Let's get you set up with not only building business credit, but getting the business financing that does build your business credit while also building your business, right? Getting you off the ground, getting you producing, getting you to start ROI and generate revenue, right? With whatever field that you might be in. You don't want to over leverage your personal. We see time and time again, clients come to us. They're like, "Yeah, I've been spending all of my money. I've been financing my business on my credit cards, on my personal credit cards, and well, all right, let's sit down, let's game plan, let's get all of this personal debt transferred over transferred over to the business side of things, and keep yourself in a good position there. Because if all that debt is on your business credit, you're still maintaining your great personal credit scores, right? Where if you have high credit card debt, well, your scores are dropping, they're dropping, they're dropping. I definitely want to, as always, separate the two.
Yeah,
Right?
it's huge.
Now, as oh shoot, I lost my train of thought there. I had something great I was going to bring up. Um, anyhow, just to, I guess we can kind of recap on a little bit. So we do have both of our programs here. Um, we're very we're based off of the prime rate. I'm sure a lot of you know. If not, the prime rate right now it is at 8.5%. The Fed has been meeting. They're predicting rate drops. So a couple of them throughout the year actually. We'll see what happens in November. No need to get into that, but typically what you're seeing on that prime rate with the traditional bank line of credit, we've seen prime plus one, we've seen prime plus two. Technically, we're around that prime plus four, prime plus six area, putting you at around between 10.5 to 12.5, as high as 14.5% APR. Now, something like this, it is adjusted quarterly, right? So the prime rate is the highest that it's ever been. It's been there for a long time as well, which is also why there's a lot of predictions on the prime rate dropping. We'll see what happens with the Fed again. But that rate for yourself is adjusted quarterly. So you're not locked into this 8.5% interest rate. Every quarter, wherever that ends up dropping to, you get to take over that rate at that point. And then you, as an intelligent business owner, make your decision if it's worth it for me to spend this money, or should I try to use my own cash that I've been stockpiling because I've had this line of credit in place for so long, and make that decision from there. Um, us over here at Lexington, we're always happy to hop on the phone with you and speak of your current situation at any point in time and give you our advice on what you should do. Should you pull from your line of credit right now? Should you hold off? Should you maybe make this investment? Whatever it is, we're always happy to hop on the phone with our clients. We're not just getting you your financing and then disappearing. We're here to stay. We're here to stay forever and ever and ever. Right. So that's a great token for all of our referral partners to really realize as well, is that we're building relationships. We want to build relationships with you. We want you to keep your relationships built with your clients, right? So this way, if they ever decide they want to come back to us, well, guess what? They're also coming through you, right? We're not here to do any type of bad business in that regard. That's why we have all of the amazing reviews that we do. I think we're somewhere up into the 220s or 230s of 5-star reviews on Google alone, let alone Trustpilot, where we have another hundreds of 5-star reviews. Which, if any of our partners are here and you've had some good experiences, we love our 5-star reviews. All right. Now, to compare these to some other business lines of credit, right? So most business lines of credit, you can touch on this a little bit farther. On the alternative side, they have more of a set structure, right? And I'd love to cut in at any point in time. I'm waiting for it. You get 12 months, you get 18 months, and you have to get it paid back in. So
Yeah, so most of the time, right, with the alternative business lines of credit, you're really only going to see 6 to 24 months repayment. Some will give a monthly payment, but a lot of times it's uncommon. You will see weekly payments, um, and they're just not as they're not going to go up as terms of dollar amount, right? They're going to be based off of your monthly gross sales, which can unfortunately limit some business owners in terms of the flexibility they're given. They're going to be capped at a certain amount, usually 100 to 150% of what you're grossing monthly. So to give an example, right, if you're doing around, let's say, 20,000 a month, you're probably going to see an approval in the 20 to 30,000 range. Where, right, the Lexington and the bank line of credit, it's not going to be based off your monthly income. In fact, there's no income required, right, which is beautiful. Can definitely get a lot higher dollar amounts, give business owners a lot more flexibility, and in the long run, just sometimes, right, with more money, they can grow their business faster, quicker, etc.
yeah, yeah, great point, because we've taken transportation companies, trucking companies who are doing $10,000 a month in revenue and gotten them over $100,000 in their business lines of credit. We've taken barbers who were doing $25,000, $30,000 in monthly revenue and gotten them well over $250,000 in business lines of credit. That's really something that when your client comes to you and they're like, yeah, I want 150,000, I want 250,000. You take a look at their bank statements and you're just like, how do I break it to this guy? How do I break it to this guy that this is not possible? Well, now it is. Now it is. This is great for any of our potential. Do you do any real estate? A lot of our broker Rick, a lot of our clients come to us that are real estate investors looking to purchase home, put down payments on homes for this program specifically. A nice little story I like to say is we had a line cook over in Alabama, just started up his business, his mother co-signing for him, got him well over $100,000. I forget the exact dollar amount. This was a long time ago. Got him well over $100,000 in business lines of credit, in which he went and put down payments on 3 or 4 properties, 2 of which were flips and 1 or 2 of which were long-term rentals. Right.
Nice.
Um, but back to those dollar amounts that we can get your clients based on your revenue. You have a client coming in with $10,000 in monthly revenue, 5,000 or nothing. You have to break it to them. Everybody wants their cake and to eat it too, right? And we hear it all the time. I want 250,000. I want 150,000. I want 100,000. Well, Mr. Customer, if you take a look at your financials, you'll realize that is supposed to be impossible, right? But we make it possible because we're not collecting any documents. One piece of information I forgot is there's also no documents required, right? Now, maybe our bankers are going to ask us for your EIN letter or a driver's license for verification reasons, but there's no documents required whatsoever. And very oftentimes we can get everything all said and done without even your EIN letter or driver's license as well.
Yeah, that's beautiful. Because, right, again, alternative business lines of credit, just not the case. You're never going to be able to get one without providing some type of financial documents.
Yeah, yeah. Whether it's 3 months bank statements, your voided check, you got to sign your contract. Very easy process here. Very easy process. And we make it as easy as possible because we do all the legwork. We work with our bankers to get all of our updates. If we do need a document, the banker is not gonna, because a banker, they only call you once a day, all right, and then maybe they'll send you an email. Me and my company, we'll shoot you an email, we'll shoot you a text, we'll shoot you a phone call, leave you a voicemail, in order to make sure things are getting pushed through nice and smoothly. We're there to definitely mediate between our bankers as well. And again, I want to touch on what our bankers really do for us because they are on that corporate level. These folks, they have direct contact with their underwriters, right? So what they're doing for us is they're painting a picture like Picasso as to what it is that your business really does, right? Or maybe what we need it to seem like we do, right? In order to get these approvals pushed through. Everything is well within reason. They are able to negotiate with these underwriters. They're able to get counter offers pushed back and forth between these underwriters. Whereas if you would have gone to the bank, maybe you would have gotten 5, 10, 15,000, maybe 2,000, maybe 500, maybe 20. But typically what our bankers can end up pulling out for us is an extra, is double, sometimes triple. I've sometimes quadruple the amount that you can get on your own. And on top of that, our bankers, they give us the insight as to where they're pulling their credit from, right? Now you can go on Google and you can check on Google, but not a lot of people know that this changes so minusculely to your location, your industry, maybe time in business. There's a lot of different factors that the banks go through to see where they're pulling their credit from, personal and business credit. So it's our job here to get as strategic as possible in making sure none of these bankers know about each other. It's almost the name of the game. It really is. Dan, I'm going to read that in just a moment.
But
Brent,
that's something.
Thank you.
That's just something huge. Just to go into that too, is that's something I've noticed with the product itself too, right? And the relationships we're leveraging here is exactly like you just said. The amount of banks that we're working with, and the relationships we have, just the volume we've been doing with them, the dedicated managers, it's crazy how big of a difference that really does make when it comes down to the amount they're getting, um, everything. And right in comparison to, like you said, when you go to one bank and you're just limited to this random Joe Schmo teller that you get, who necessarily isn't right. They're not holding your hand through the application process like we are. They're kind of keeping you in the dark, and it really goes to show in not only our approval amounts, but
Yeah.
the yeah.
Yeah, and your regular local teller at your local bank as well. They get you applied for something. They have a completely different set of underwriters than the bankers that we use do, right? And our bankers underwriters, they're typically taking on clients that are doing 1 million, 5 million, or $50 million in revenue, depending on the exact tier that these bankers are on. Which in return, these underwriters, well, you got to think they're giving some pretty darn good approvals, and they're giving some
Right.
higher approvals
But
than.
they're also looking kind of, you don't want to say down upon, but they're you're right. They want the bigger files, and they almost treat the smaller ones with not as much care compared to what we get with our relationships.
Yeah, I mean that's what I'm saying is that even our smaller clients, when put into the hands of these higher tiered bankers, which in return have a different set of underwriters, that different set of underwriters looks at these smaller fish in the sea that we're bringing over, and kind of treats them like they treat them like they're a big fish.
Right.
Maybe they have a different bank account. Maybe they have other businesses. Maybe this is a different startup company. So these are things where our bankers really come in to assist us in this, in both sides of the program that we touched on, the traditional bank line of credit and our 0% APR side of things. All right, now at this point, I want everybody to start asking. If anybody has any questions, feel free to read off some. I'm gonna read a little something that Dan the Lion just typed up for us. Dan is the man, by the way. As a partner, I highly appreciate your team. Your funding products are outstanding, but don't forget the great Lex Media product you offer. Remy Smith and his team have done a fantastic job handling my business, paid advertising, creating my ads, and creating professional looking marketing materials. The ads they place are effective, they generate leads, providing me prospects that I can convert to clients. I warmly recommend Remy and Lexington Capital Holdings Lex Media. Great ROI, great return on investment. Remy's over here clapping.
Thank you, Dan.
He's golf clapping over here. You should see
We
the smile
appreciate
on
that.
this man's face. We appreciate that greatly. And Brent, always nice to see you, brother. Thank you so much for joining us on a little team meeting the other day. A lot of the guys learned some good lessons from you. All right, so good recap here. Our Lex Lock, our Lexington lines of credit, we don't have any. We have almost no requirements, no time and business requirements, no revenue requirements. We accept co-signers for funding. Um, I hate myself. That was another great thing I was going to mention. It'll come to me. Time and business, revenue requirements, no documents as well. No documents required. And we do have two sides of the program, both very, very modest rates and forever revolving. Forever revolving. You can have these in place forever. You have minimum monthly payments, typically interest only, or on our other side of things, our 0% APR. Those are all principal payments that are being paid. Sorry, I had a little crick there. Now, we also do offer a couple of other, traditional term loans, except we're not particularly here to speak on that. We're here to talk about our Lex Lock specifically. But yes, none of those requirements. Nothing's going to be reporting to your personal credit. Your personal credit is extremely protected. Everything here is unsecured, right? So if you do end up defaulting on these, nobody's coming and closing your business down. Nobody's taking your vehicles. Nobody's taking your building. Nobody's taking your house. Nothing. Completely unsecured. Oh man, I don't know why I'm drawing blanks today, folks. It's been a long day here, I guess.
But yeah, just credit based. It's really, offers a lot of flexibility, no industry requirements. It really just boils down to just credit.
Yeah, that it does. And you're building business credit while not hurting your personal. But again, definitely going to take this point in the evening to open up the floor to any questions. Going to make sure that I didn't miss any here. If anybody has any,
feel free to shoot them over. Best webinar there is. Appreciate it. Anything on the Instagram here?
What is the
Alright.
average funding amount for the BLOC?
Average funding amount for the BLOC. So it depends on exactly which banks we can go to, which vary depending on your state. I'm gonna say the average without any financials is 50 to 100,000. 50, definitely 50 to 100,000. That's with zero financials. You could be doing zero revenue, nothing whatsoever. 50 to 100,000 there on that traditional bank line of credit. And it's really what I'm saying is 50,000 with one bank and then 100,000 with another bank with the opportunity to get a full 150,000 realistically. But if you want to average that out, we'll call it 75. But great question there, Terrell. Thank you very much. All right. So that's pretty much everything. Again, gonna wait for any last minute questions to roll in. We still have a good amount of viewers here. If anybody is looking to be onboarded as a partner here at Lexington and hear about what we can do for you and your clients, please inquire. Check us out on we can inquire right on our website, lexingtoncapitalholdings.com. We are on pretty much every social media known to man, from your www, LinkedIn, Facebook, Instagram. I think we're doing a TikTok soon, or if we don't already have one. Alignable, we're all on Alignable, so feel free to link with anybody on the team here on any of those platforms, or link directly with the company. We're always here to help out. Again, my name is Appio Fragoletti. If anybody is looking to be onboarded as a referral partner, you can do so online. Tom did just put his email in the chat here. I'm going to throw his email into the Instagram chat while we are here. Actually, you mind doing that?
Yeah, for sure.
Yeah, don't hesitate to reach out though. Anyway,
throw Tom's email on the Instagram. He's our head of partner relations, everybody. So if you are looking to be onboarded as a referral partner and get paid out on any of the clients that you bring our way and hear about our programs and maybe a little bit more detail down to the nitty gritty, definitely reach out to Tom. Me and Tom work so closely together because so many referral partners want to refer over for the LexLock program that we had to we had to get rid of our separate offices and place ourselves in the same office. That's how often we're communicating to each other. So give us a shout here. It's in the Instagram, Tom at LexingtonCapitalHoldings.com. Should be on everything else as well. But everybody, really, Terrell, Tom is the man. Really appreciate everybody's time here tonight. If anybody does have questions, you already know where to reach out to us on. Again, my name is Appio Fragoletti.
my name is Chris Colucci.
And let's talk about it.
Let's
Check
talk
out our
about
podcast. Let's talk about it. Follow us on social media. Do everything. And I'm going to keep on talking until somebody shuts this down. Follow us everywhere. Lex Media. Let's talk about it on Spotify, on YouTube, on Apple Music. It's everywhere.
Come work with us.
Come work with us. Let's